Alrighty. Good morning, good afternoon, and good evening. It is Tuesday. We're moving along in the week here. Tomorrow, the Fed, the U.S. Federal Reserve, our treasurer, or our central bank. That's it, central bank. Boy, I hate calling them the central bank. You can see I threw up on the screen to start off with this morning. There is the 10-year U.S. Treasury bond. And, we have this conversation a lot, and I always like to reinforce the idea. When you see the bond price, that's what we're looking at here. This is the bond price with the open, high, low, and close, and our dots on it. When you see the bond price dropping, okay, that means interest rates are rising, okay? So in other words, as this was going down, our interest rates were increasing. When we see the price of the bond going up, interest rates are dropping. And now you can see we're back into this rhythm again. You hear that irony in my voice. You can see our interest rates are rising. And with our interest rates rising, we normally see currency pairs finding ways to go down against the dollar. In other words, the dollar gains against other currency pairs. That's the magic of it all. So let's take a look at the dollar index this morning and see what it is doing. Bada bing, bada bang, bada boom. Right there's the dollar index. And you can see it is doing exactly what the reverse of the bonds are doing. It is rising in price. So in other words, the dollar is going up against the 6 different pairs trades combined together. And so then we go over to take a look at the euro. And there's the euro, and you can see the euro closed in a daily. Let's grab one of these greens. Closed in a daily buy yesterday. Let's move that one over. Zing, 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 zing. Right there. Move it over more. Woo. Woo. Woo, woo, woo. Put it there. Move it over a little bit more. Put it right there. Move it over a little bit more. You see yesterday it closed in the daily buy. This morning it was a little bit higher. Then it hit the Fibonacci line there and it got its common sense in its head and said, wait a minute, aren't those crazy Americans lowering the interest rates tomorrow? I mean, the futures contracts keep on predicting that they're going to do it. At the same time, we have other smarter, I want to say, how do you define one less smarter and one more smarter? Well, someone who's smarter is usually more accurate than the one who is less smarter. How about that? That's a good way of describing it. And so that's what we see right now is the smart ones are saying they should not be dropping interest rates the way they have been because I think we have on Friday PCE coming out, and that's another signal of the inflation that we keep on seeing increasing. And it's like, just leave it alone, gals and guys. Leave it alone. Stop trying to play with the interest rates. But due to the theory of our socialists here in the United States, they follow John Maynard Keynes forever and ever, a British economist from the last century, in the early parts of that century, I think pre-World War II. So, it's like in between the great war to end all wars between 1913 and that era. But in the end result is that they find when you have inflation, the objective is to wreck the economy. Let me just say that one more time. John Maynard Keynes believes that you starve an economy of money and you allow businesses to go out of business. And it's like, what's that like that when there's a wash, rinse, and do over? Start over. And so they think that you need to destroy the economy to, slow it, to slow it down and mess with the health of growth. They don't believe in growth the same way as modern, I guess you could say, Ronald Reagan, 1970s. Even John Kennedy was lowering interest rates and trying to not just slam the economy back in the early 60s. Hence, probably why the Democrats needed to shoot him or something like that, because he was more of a supply side. He was the beginning of the supply side concept, and so that's where we kind of stand at the moment. Let me see if we can find John Maynard Keynes. When was he? Because they all swear by him. Maynard Keynes. There he is. John Maynard Keynes. Let's see. He was born in 1883 and he died in 1946. Came out of Cambridge in 1915. Joined the UK Treasury back then, and has been a thorn in the side of good economics ever since. Isn't that amazing? Just yeah, there you go. I like that. Look, can you see that? Oh, you can't see that. There, let's do this. Let's shoot over to here for a second. John Maynard Keynes, damage still done by defunct economists. Yeah. Let me just go back one. It was right there. John Maynard Keynes, there he is. And it says, John Maynard Keynes, the damage still done by him. And they, the socialists really like him. And so, you had labor. That's why they're trying to probably get rid of labor at this point. Labor hasn't been in office in England for more than less than right around 3 months now. Let's see, July. So August, September, and October. So it's 4 months now, November. And we're heading into the fourth or fifth month of and they're trying to overthrow the government over there already. They're trying to get them to resign and have another election. So we're Arthur Laffer. I guess you could say Arthur Laffer. Let's see, Arthur Laffer and the Laffer curve. There we are. And Arthur's still alive and very successful. And has been, I saw a great stat, I guess, yesterday. It was very good. It was like when the Republicans control the House, the Senate, and the presidency, we've seen 11% growth in the markets. And when, stock markets and so forth. And when you have Democrats controlling the House, the Senate, and the presidency, you have 1% growth. That's that Mr. Obama used to call it the new norm. In other words, get used to it. 1%'s fine. No American dream. So this is the difference between the two. They don't exactly fire along in the same, not at all in the same direction. Totally the opposite. We believe you don't have to destroy an economy to get rid of inflation. All you have to do is, inflation is because there's too few items to buy, and so everybody in the room wants them. And that's John Maynard Keynes. Starve them, destroy the room's economy, and then start over again. And where modern economic theory, which is, showing that you don't need to hurt people to clean up inflation. You just need to stop spending government money, because government money is just from the population because it comes from taxes. So stop taking money from the population and have more goods. Let people grow. Let people live. Let the population innovate. Have more goods because they have more money in their pocket from their own earnings, and they'll spend it smarter than Uncle Sam, the government, or the parliaments and so forth. Well, I guess you could say Mrs. Thatcher had a really great saying: sooner or later, you run out of other people's money. That's what it comes down to. I'm going to say that again because I get a laugh out of that. Sooner or later, you run out of spending other people's money. That's right. And that's the government, spending other people's money. It's not something that they grow. They just tax you, take it from your pocket, and they spend it the way they think would be smarter. Well, we all know government's not smart to begin with, so the less government, the better. So anyway, that's why you see this dichotomy. In other words, some people might be saying, geez, Doc, why are we talking about this? What's this got to do with the price of tea in China? You know, what malfunction do you have going on there, Doc, that you have to have this conversation? Well, it's obvious right here. What are we seeing with the dollar index? It's going up. People are selling other currencies and buying the dollar. Why? Because they're making more money by owning dollars than other currencies. And then you say, well, how could that be? Because, you know, ever since the Obama era, we had zero or minus interest rates where we really lost money. We really got screwed. And so we go over here and we go back to where we started from this morning, 14 minutes ago or 13 minutes ago. We go back and look at the bond again. Let's go take a look at the bond. And so if they're going to be lowering interest rates, then, excuse me, a little sneeze there. Yeah, there we go. Excuse me. We go look at the 10-year bond right here, where we started off. And it's like, wait a second. If they're lowering interest rates officially by the government, why aren't the bonds reflecting it? Why aren't the bonds going up? You know, if you're lowering interest rates, remember, when the price of the bond is going up, interest rates are dropping. But why aren't they dropping now? So why isn't the bond like up to here, up to that area somewhere now, not down here? Instead, we're down here. So something's wrong, right? That's why we're having this conversation. You know, in other words, here it is in our face, a perfect example of bad government, bad ideas. And they're showing it to you on the screen. It's being reflected right there on the screen. And that's what's really has me all fired up, saying, stop paying attention to an economist that was born in the 1880s and shown to be wrong over and over again. Remember, they created the Federal Reserve, our central bank, to stop recessions. And what do? They officially create recessions. I'll say that one more time. In 1912, Mr. Wilson was elected President of the United States, and he created the Federal Reserve because he didn't want the free market to control the economy. He wanted the government to control the economy. So he created the Federal Reserve. And by doing so, it was supposed to, he sold the idea that we will not have any more recessions. We'll be able to control the economy. We'll be able to reduce inflation. That was what he sold the idea on, and the socialists in our government thought that was a brilliant idea, since they were the ones that really controlled pretty much everything all the time. They've been doing that since the 1880s. Boy, that 1880s period is a real downer, isn't it? Definitely no fun, no fish, no more. Definitely no good, that's for sure. And so, we're stuck with a government institution that can't spot inflation if it's smack dab painted on their face. No fun, no fish, no more. That's the way I feel about it. I don't want it. I don't want to do it anymore. Please stop it. But so far, no good. Mr. Powell couldn't figure out inflation with the former Fed chair, Mrs. Yellen, who is now our Secretary of Treasury, which is our finance minister in the United States. And the president himself saw that same thing. And not as if I would pay attention to what Joe had to say to begin with, since I've been living around Joe for 50 some odd years alone. Since he's been in office for 55 years, I've had to put up with him, and he's very irritating and makes no sense most of the time. But he is a socialist, so life is good for them. You know what I mean? Socialists, have a lot of power, and they're coming to the end of that, and America is going to go back to capitalism. Hey, 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 hurrah, hurrah. So, what do you think? It's a gratitude. Real estate parameters and. Let me just answer this. Webinar. It sounds great. Yep. So, that's our issue today. We're just like, what is wrong with these guys? It does. So. How many so's should I say? And the end result is there we are. We have the bonds going down, trying to make the lows of the last, I don't know. How far back can we? Let's take a peek. We'll take a peek on a screen. It'll give us a general idea of how far back and where we're at. Are we heading for the highs again? You just never know with these characters. Bad government is bad government, and that's what they do, and they're proud of it since they own the media, so that no one really can, say anything bad about it, because they won't allow it. So you only have very few information sources that will tell you how bad it is, and I'm one of them. All right, so, well, you can see we're getting down into the July lows. We're getting very close to that. Look at that. Very close to the July lows. Let's take a look at one full year right there. There's the June lows. There's the May lows. So we still have a lot of room. We're at 109.56, as you can see in this box right here. And where are we going to move this thing? Can we move this? Let's see. It doesn't really matter. So we are going after the summer lows. That's what we're doing right now, is we're going after the summer lows. And that was probably the, this is where they finally, I guess, let's see, 5-year lows. Yeah. So look at that. We're going after the lows of 2000, October of 23. This is where Mr. Powell, right here at this spot, right there, came out and said, we're going to cut interest rates 7 times. And the market lifted up. Remember, the bond price went up. That's a good thing. Interest rates dropped. And then it started to thinking, maybe this is not right. You can see that curve right in here. Let's see if we can do this. Let's just go for one full year like that. So this is where, is that where it was? No. Can we move it over? Oh, okay, let's do the 5-year. I guess we got to do the 5-year. So this is where Mr. Powell, see if I hit an advanced chart, let's see if it gives me some ability to manipulate it a little bit more. Let's see, indicators. Let's do this. It would be nice to, just have that whole range. There it is right there now. Let's do 5 years of it. 1 year. There's the 1 year. So Mr. Powell did that. Let's see. Oh, here we go. There we go. Now we got it moving. So here's where Mr. Powell comes out and does the famous statement. We're dropping rates. This is the highs of the last 15 years or 20 years or something like that. 20-year interest rates. So remember, when the bonds are going down, it's losing, the interest rates are rising. It's running up. And so, you see, there's Robin. Yo, Rob! What's cooking?
You lose connectivity, did you?
No.
I lost my, what's the browser? Google, whatever it's called.
Yeah, Google.
It locked up and I had to reboot.
Oh, okay. No problem.
Out of nowhere.
I know that's they have them synchronized like every couple of weeks. It happens.
It just went out again.
Oh, jeez. I guess turn on and turn off. The classic.
Well, I'm doing that now.
Yep.
It came back this time.
Yep.
It doesn't like something.
Yep. I hear it's conflicting with something. I hear you.
All right.
Okie doke.
What?
All right. That's why you're not seeing Robin. He's out there doing that. So you can see here, and this is where Mr. Powell the Fed chair, tells us he's going to drop interest rates. It seemed like that lasted for about a month and a half, and then they started wondering, is this really true? So then you can see again it drops down, but it makes a higher low here. And then you see it makes a higher high here. So it's like, yeah, this is cool, but I keep on telling you here at the webinar, this is not good. This is not good. This is not good. Inflation at the time is cruising in the low twos on the official BLS. Mr. Powell's favorite inflation rate indicator, he has one he likes to follow, comes out and it's showing it to be like 2.9, something like that, and he's all excited. He says it's going to go to 2, and then he drops the interest rate, and then what happens? He starts calling the bond vigilantes again, and interest rates and inflation in particular starts to rise, because what Doc said, because I follow Arthur Laffer. I don't pay attention to John Maynard Keynes. And so, Arthur is alive, and I've talked to him, and he's a good guy, and, he makes sense, and I've been following him for almost 50 years now. So anyway, you can see here it rises back up, and it's like, yay, interest rates are coming down. And then, again, Mr. Powell goes and does something stupid. In September, right here, he lowers interest rates a whole half a point when we're saying, don't touch that button. And what happens? The price of the bond goes down dramatically, down to 5-month lows, I guess you could say. There's a 5-month low right there. That's July. So you had July and August, September and October, and November. And you can see it didn't take long. Once he dropped interest rates a half a percentage point, officially by the federal government, the bond traders said, you're out of your mind, we're not buying it. And it fell apart, and interest rates rose. So he dropped it a half, they rose it 3/4. Matter of fact, they added a quarter to it. They beat him up even harder. Then he dropped interest rates again a quarter, and we said, just don't. And the Fed pushed it for a while, and look where we're at now. We're basically right where he was when he dropped that interest rate again. And now, I'm sure they're anticipating. I don't even know what these crazy government. Remember, the Fed is in there. There's something called QE. We've been doing it since the beginning of Mr. Obama's presidency, basically. He was president-elect when we started doing it. And QE is called quantitative easing, and what it means is that the central bank can buy anything they want, whenever they want, and as much as they want. So in other words, the Treasury, U.S. Treasury, is floating bonds, government bonds, because they keep on borrowing money like there's no tomorrow. And the Fed will go in and buy those bonds. And some of the people in the world will buy them too, because they're a good return in investment. But overall, the price of the bond is not really true, because you're basically, what did they say? Something about paying Peter to Paul, one of those Christian statements, those type of things, when you pay Peter, you take it from Paul. Or basically you're taking money out of your left pocket and putting it in your right pocket, and you try to claim that you have twice as much now, but in fact you only have taken the money from one pocket, moved it to another pocket in your pants, and it's the same. And that's where we stand at the moment. And when this is so obvious in our faces on this chart right now, I think the rest of the media in the United States should be screaming from the rooftop about it, saying, what a fool this guy is. What is his malfunction? I thought he knew what he was doing, and he still, for 4 years now, has no clue what he's doing. So I just have to emphasize that, because the evidence is in front of your face, in front of my face, and you don't hear it in many places in the financial community. You would think Bloomberg and CNBC would start every day off on a show with the bond chart and showing how insane it is acting compared to what the federal government is doing. It's doing the opposite. It's rebelling. It's like when someone says, a military leader says, charge, and everybody just turns around and runs the other direction. It's like, wait a minute, you're supposed to attack. Why are you running away? Well, that's what the Federal Reserve does every day. They go, we're lowering rates, and then rates are going up. And it's like, well, wait a minute. But, since it's an official government rate, now going to be probably 1% lower than it was 4 months ago, then it helps the banks. It helps the private sector on some small scale. Because believe me, how many times have you heard people say, oh, yeah, they're lowering the rates, but they're not lowering my rates? The banks will make the money, but the population will not. The population is going to be punished through inflation. The population is going to be punished by high rates still. They're not going to lower them. And, we could show you, what do you call it, mortgage rates and so forth. They're not coming down. They're staying up. So, anyway, that's it. That was the beginning of this webinar today, and it's probably a good title. The title probably should be something like the Fed. Title should be something like the Fed still doesn't know what it's doing, but it's having a lot of fun. I think that's probably what it comes down to. Fed. Let's see. F. Fed lost in finance say doing finance. Fed lost let's see, Fed lost doing finance, or how about Fed doesn't do finance? That's better. There we are. Fed doesn't do finance. Instead, it's playing. I think that's really what it comes down to, but we won't put that in there because it's going to be, the title today will be Fed doesn't do finance. And that's really what it comes down to. So, ta-da! All right, let's go take a look at anything anybody wants to see. And we would have stopped on that ramble anyway. If you would want to see something, I could stop and we could go, look at it. So let's jump over to, where are we at now? Let's go jump over to, I'm just going to get rid of that. Or let's just go like that. And then let's go over and take a look at the currency pairs individually. You can see here it's trying to work its way down. It's a little bit lower today than yesterday, but it's in a buy. You can see the weekly, which was acting kind of interesting there. It was trying to get through the weekly buy. They were, look at it. It's pushed up. It was very close. We're getting closer, but we've been in a weekly sell now for a while, all the way back to the 112 area. We've been in a weekly sell on our weekly algorithm. And we are, let's see, we are. And then on the daily, obviously, we're in a buy from yesterday, and it went higher today, and now it's coming to its, I guess you could say it's coming to its reality. It's starting to realize, wait a minute, this is crazy. This is crazy talk. Crazy talk. So let's take a look at cable. We were really surprised when we looked and put the numbers on the spreadsheet on cable. Cable still in a sell. I thought for sure it would have jumped up into the buy yesterday. I was really surprised yesterday afternoon when I was filling out the spreadsheet, and it was like, wow. Now there it is again. That's how it was yesterday too on us. Remember, it was up higher touching the line, and then it backed off a little bit and stayed in the sell. Now today, it's higher. The euro is losing, and you can see the weekly has pierced right there too. We got both of those. They must be, here's another government starting to fall. Calls for Trudeau now to resign over tariff row. That's because Mr. Trump keeps on making jokes that maybe we'll make Canada the 51st state. Talk about the level of incompetency with these government leadership, the government leadership. That's why we're really cheering on Nigel. We've been cheering Nigel on since the day he got elected to the UK Parliament. We're like, this guy, Nigel knows what's going on. He talks to Art Lather. He believes in Art Laffer's work. He's seen the success of it. He does not like John Maynard Keynes. He likes Donald Trump. Donald Trump is a capitalist and a benevolent capitalist. He's a good capitalist, not a dictator type capitalist, where, like your classic Democrats are usually the socialists and the Marxists. They're all dictators. They all want you to do it their way or no way. Whereas good capitalists will say, do it your way. It's like the McDonald's commercial. You can have it your way. Exactly. So you can see their cable's lifting. Maybe they're seeing the potential for a new election. I've stopped paying attention to how many signatures they have now, but I'm sure they've got a lot. We stopped paying attention when it got over 3 million. They have to respond after 10,000. So when you get up to 3 million, there must be a lot of conversation going on. Like, I want to keep my job. Let's have a new election. Because at this point, that's exactly where they're at. They're not sure what things are going to look like whatsoever. I mean, can you imagine what the next government could be in England, with Nigel being considered the number one candidate for a prime minister? I mean, the betting is money says that Nigel could be the next prime minister. I mean, that's wild. I mean, his party in the UK, in the Parliament itself is only like they only have like 8 members of the Conservative Party. The Tories outnumber him enormously, but people think that the Tories are going to vote for Nigel this time around. Yes, indeed. I'm going to take a sip of my tea for a second here. My throat feels a little sore, nothing major. All right, we're back in the saddle. Let's take a look at the Swiss Saltine. Right there. Yeah, it's going to the top end of that range. So we thought that was curious here. 4 days back, we looked at it. Let's see, let's just get a buy in there. There's a buy. So went into the buy there. Remember, this is the USD CHF. So this means that when it's rising, it's losing against the dollar. And when it, drops, like, right, I guess you could say like right here, when it was going down for 3 or 4 days, it was gaining against the dollar. So we're coming towards the top end of the range, which is not the worst thing in the world. They're adjusting, but I am a little surprised, like yesterday and the day before and the day before and the day before and the day before. For the last 6 days, it keeps on closing higher. Not only does it trade higher, but it closes higher. That's usually a warning sign. I think I might have mentioned it yesterday. When I saw the euro gaining against the dollar and the Swiss not, I said it's not a good sign. Definitely not a good sign. And so that's really what it comes down to at this point. We're really in a situation where, they're saying the interest rates are rising in the United States. That's what they're saying. That's what this says. People want to put money into dollars because they get more money back than when they put it. I think the rate in let's see what the rate is in Spain and Spain in Switzerland. I know that they dropped it last week. So let's take a look. Let's take a look at the bond prices. Let's see, we go like that. And we go here. We go to the bonds and rates. Let's see, we go to Switzerland. Where's Switzerland at? How come I don't see Switzerland? So we see, let's see, there's UK, Germany, Italy, France, Japan, Australia. I wonder what the, let's see if we can find Swiss. Maybe I can search it. Swiss bonds. I want to say that they're at flat. In other words, they're not paying any interest at all. Let's see if we see this. Swiss bonds. They're giving me EU bonds instead. No, okay, so let's just go back to what we were checking out. Go like that. Let's put it up on the screen so you can see it. Let's do that too. And here is the U.S. bonds. Let's just look at the. Well, there's a 3-month bond trading in the U.S. at 3.5. You can see the highest one is the 20-year now, trading at 4.7. We've seen them as high as 5.25, I believe it is. Now we can let's take a look at the UK. There's the UK, and the 10-year there is. Let's do that again. There's the UK. Look at them all. There they are. The 20-year there is at 4.99, and the 30-year is at 5.0. So they're even higher interest rates in the UK at the gilts. And then let's go to Germany. See what they're doing. There's the German rates. There's your 10-year trading at 2.24, and the 30-year is trading at 2.5. So you make less money. In other words, you're getting half of what you would get if you were in UK bonds. Maybe that's why they're buying. That's why probably if we go look at the Euro GBP pairs trade, I'm sure it's gaining against it today. That's for sure. Let's take a look at Italy. See what the Italian bonds look like. Right there. See, the 10 years are at 3.4, and the 30-year there is at 4.1. Excuse me, 4.1. And then, so you're getting that flavor. There's France. France does have bonds. It's good. Okay, let's see what they're doing with them. The 10-year there is at 3 and change, and the 30-year is at 3.6 compared to 3.1 basically. And then, what else? Is there anything on the continent? They're not showing us anything else at that point. So, let's see what Japan's look like. Japan's really low. That's ink. Japanese ink, as we like to say. They pay for the 10-year. They're paying a whole 1%, 1.087. So it's basically 1.1, I guess you could say. And the 30 years at 2.3. So, let's see what Australia is doing. There's Australia. The 10-year is at 4.3, and the 15-year is at 4.5. Cool. I think Brazil's in the teens, like 13 or 14 or 15, something like that. Yeah, there it is. The 1 year is trading at 15%. It's awful hard to buy almost anything there. They got, I guess you'd call that hyperinflation. And we don't even see Turkey. Turkey probably doesn't even have a bond anymore. Probably nobody wants to be near it. So, let's see what a Turkish bond. I wonder if we could get a Turkish bond. There's Brazil, France, U.S. Let's see what a Turkey bond is like. Let's see. iShares. See what that shows. 35%. Okay, 35%. So, as bad as Brazil is, Turkey is even more off the rails. Central bank hikes interest rate to 30%. Okay. I guess that's where they hang out nowadays. Turkey lira stock market slide as President Erdogan gains momentum in tight presidential race. Yeah. I've heard some interesting descriptions of him. Interesting. Anyway, you see there, that's 35%. That hurts. Ouch. All right. So that's that's the dilemmas we have to look at every day. We have to. At this webinar, we give you real information so that you will make money instead of lose money following crazy leftist, socialist propaganda, I guess you could say. That's the way I look at it. It seems like it's propaganda. I mean, why doesn't Bloomberg start the day off telling you every hour where U.S. government bonds are officially, and then why they're not trading the same place in the open market? That would be a goodie, huh? Instead, they cheered them on. Yay! You can screw up our economy, and we think it's great because we can pretend. All right. All right, from there, we shoot back to the currencies. We'll finish off with, where are we at? We left off at the Swiss, trying to get a better idea. Oh, you know what? I should have done that. Because they gave the Turkish National Bank, where are the prices for, let's do that again. I want to know where the prices are. I heard someone say that they were down to zero on that last cut. That's why I'm curious. I find that to be, I just would like to know. Because the currency's holding up really well. And that means it's a great place to be invested. People don't want to, run from it. Swiss bond prices. Let's see what that does. They did lower that rate last week. Swiss regulatory defends controversial $17 billion write-down of Credit Suisse. That was a while ago. That was last year. Okay, here it is. Euro tiptoes higher. France turmoil keeps investors on edge. And amazing. You can't even get a story from, this is one of the leftist networks, CNBC. That's up for sale. They don't make any money, so people are kind of getting fed up with it. The parent company is tired of losing money on it. It's a propaganda. That's why I call it a propaganda machine. It only voices one opinion, and that is the leftist point of view. So, don't see anything particular here. Why can't we? Well, let's do this. We'll Google it. Maybe Google will be honest enough. Swiss bond rates. Let's see what that is. Let's see. Currency interest rate, exchange rates. SMB policy rate of 0.50 valid from the 24. Interest rates on the site deposit. So it's a half a percentage point. So that's where they've cut it down to that, I guess. Swiss government. Here's the 10-year. Okay, here we go. Now we got something. There it is. Switzerland's 10-year government bond currently offers a yield of 0.209. So it's, let's call it a quarter percentage point. Just a quarter. That's what it is. Wow, 16 basis points. Okay, yeah, the Switzerland central bank rate stands at half a percentage point following most recent adjustments on December. Okay, that's what I heard. I heard it might be a half a percentage point. And so the 10-year is trading at a discount to it. The current quotation for Switzerland's 5-year credit default swap is at almost 6%. Interesting. Okay. Just wanted to know what it is. I mean, when these organizations that claim to want to give you financial news refuse to make it easy for you to find the financial news. That's the thing that drives me crazy. All right. So from there, now, brown cow, let's shoot over to the currencies again. Nope, there it is right there. Oh, that's right. You didn't even see what I just pointed out. Let me just show you that. Did I throw it away again? I guess that's what it is. I threw it away. So let me do this. Go like that. Go like that. Go to history. Like that. Go like that. And you'll be able to see it. There it is right there. Boop. Let me do it again. And we'll highlight Switzerland's 10-year government bond currently offered at basically a quarter percentage point. 0.21. That's close enough to being a quarter. It's a little bit lower than a quarter. Yep. And the swap rate is 6% right here. Switzerland's 5-year credit swap is at 6%. Okay. There you go. So now, brown cow, we shoot back over to the currencies. Let's take a look at the yen. unless someone wants to see something else. There was the Swiss. We finally got reason why we're seeing it rise, because interest rates are not as good a return as you would want, and that's why the Swiss tells us the truth all the time. It's pretty cool. Usually it's follow the price of that Swiss and you'll understand where things are at. From there we go over to the yen right there. There's the yen. Yen's doing that same thing. It's been lifting up as this is the dollar yen pairs trade. So when the yen is rising in price here, it's losing money. You can see here it went into the weekly buy last week. It was only in a weekly sell for 2 for that downdraft. You see the last time it went into a weekly buy, it went from the 143-ish, 44-ish area, 45-ish area, all the way up to the 156 area, 57 area. And then we go check out the great experiment, the Turkish lira, where you got 30% bond rates over there and 35% bond rates and things like that. Let's see, let's find that. There it is right there, Turkish lira. It's the Euro Turkish lira pairs we watch. You see it's a third, let's steal one of these greens. It's a third day in a buy now. And I thought, and I say, and I usually do believe it, and that is, I don't want to move the Fibonacci thing. Someone's watching it when we go there. That's why I leave these things in there. And so you can see here we're trying to get back into that buy. It's at minus 0.01. It's so close. So close. I kind of think it's because the euro is a little bit more stronger compared to what it has been. Mr. Trump yesterday said that he gave credit to Turkey for the collapse of Syria. So maybe that's a positive thing for both Turkey and Syria in the end. I mean, it would be nice to see it doing more business and less killing, That's what the problem is. They are doing their best to kill people instead of grow the economy. All right. And then we go down to South Africa, take a look at the metal complex. Nope, not there. Right there. South African Rand, dollar pairs trade. Not a good sign. Not a good sign. But at least the weekly is still threatening. As you can see, it's trying to get below the zero line here. And it's doing it. It's at minus 0.0082. So it's trying to get into a weekly sell. But these last couple of days is rising again. That's not good. It's trying to climb back up in here. That's usually a sign of weaker metals. The Rand kind of sometimes leads the metals market. Sometimes it's just at parity with it. So we go back over to gold. Right there. Gold is trying to push down. We're on the third day of a sell, not really going anywhere particular. And yesterday they were trying to get it up above the previous day's close. Didn't do too good a job. And you can see the weekly is trying to lift very aggressively. So we'll see what that comes down to. It could be the crazy stories about the drones flying around on the East Coast and the West Coast. Something about an increase in radioactivity. And when you see the increase of radioactivity, they start to get worried that someone's building a nuke. And you can only shield so much. And, radioactivity, you got to imagine, radioactivity is pretty easy to spot. And, you got to imagine that the discoverer of radioactivity, Madame Curie, had so much radiation on her fingers and her notebooks and so forth that no one can actually read them still. They've learned not to. I mean, they have pictures of everything. They used a device, but they actually can't open the actual books themselves I mean, as a person, you'll get radiation poisoning from it. So, it's pretty. I mean, she's been gone for 100 years now, 70 years, 50 years. I think she died in the 30s or the 40s, 1940s maybe. So, 75 years later, you still can't open her notebooks because they're so radioactive. You can do it with a machine in an enclosed environment, and then they take a picture of it. But so obviously, when you play with radioactive material, it will show up pretty clearly. So I mean, they can look 1,000 miles out and go, a little higher radioactive level there. Whoops, let's stay away from that. All right, so there is the gold. You see gold is trying to lift up on a weekly dramatically. You see silver was doing the same thing. Now it's actually fallen down. It was boxed off yesterday, and it was above the zero line. Today it's losing it and dropping down for a fourth day. And then we can see the gold of China, better known as copper, doing the same thing, breaking down. It's still in that just above the zero line. It's at 0.0074 at the moment. It's just up a little bit. And then platinum, the most dangerous short in the world. You can see 4 days in a sell there, and it's lower today than it was yesterday on a closing basis, or last trade, you could say. But they're not taking out these lows right here yet. We'll see what goes there. It's hard to believe they're going to take them out, but that is the market. So. And I hope anybody out there that talked to Robin is having no problems with their beta platform. In other words, there's a few people now looking at the beta, I understand. And so, we'll see what goes with that. The beta, let me just double check to see if anybody else is registered, and we haven't put in their data. Doesn't look like it. So it's just Nick 208632. Hope it's working well for you. Let us know. We'll gladly show you how to use it more if you're not getting the action out of it you want. What else do we got going on here? So that's the four metals. Let's take a look at the energy sector. Let's see what Brent is doing today. Where is Brent? Where is Waldo? That's what I call Elon Musk now. Where is Waldo? He's like, every time you turn around, him and Trump are hanging out. All right, now from there, BZ. Where's BZ? Well, let's take a look at West Texas to start off with, and then we'll find BZ. It's around here somewhere. I got to write it in there. If I spot it, I'm deleting it and putting it back in better. Let's see. There's West Texas right there. See Jan crude. We're starting to look at both the Jan crude and the February crude, because by the end of the week they're going to be shutting the Jan crude down. It only goes month to month. You can see it's the second day in a sell. Went into the sell yesterday. Did it go into sell yesterday? Just take a look at it right there. No, didn't make it into the sell yesterday. It's making it into the sell today, but it had a red dot from yesterday. Pressure's on. You see it's below it, and it's still up, way up in that buy. It's the weekly buy is holding on. So I guess they're paranoid of between the bonds and between the energies and the gold and oil are trying to put weekly buys back in again. See how that goes. See that there, pushing it down, and that's why the South African rand is pushing up. Let's see. Let's go over to. Now let's see if we can find the Brent. We'll just march down that thing slow and steady. BZ to you. easy to you. They work together. There it is right there. There's Brent. It's right near the dollar index. Okay. You see it's doing the same thing. It didn't get into the sell yesterday, but it's getting in there today. And now it's been in a weekly buy for like 3 weeks. Let's see if it tries to start to roll over by the end of the week. Maybe it's next week. As they say in the hedge fund universe, it might be next week's business. And then from there, we shoot over to the heating oil. There it is right there. The kerosene, it's breaking down today, feeling a little pressure. You see it's below the zero line. It climbed into the weekly buy after 3 weeks in a sell here. We'll see how well that goes. If it closes in a buy and we're in daily sells and then next week we go right back into the weekly sell, it just kept you out of harm's way with this little run up. Sometimes we always say that, traders. There are 3 positions: long, short, and neutral. And sometimes the system tells us to be neutral. Let's see. From there, we're going to jump over to natural gas. Jan Natural Gas. Showing pressure for a couple days. And we're 3 weeks in a sell. So you can see right there, it's definitely showing weakness. Obviously, it's been parked in the 3-ish area. Mr. Trump is going to be signing an executive order on the first day of his presidency on January 20th at 12:01. He said he's going to sign an executive order right there, right now. As soon as he gets sworn in, they're just going to pull these executive orders out, and he's going to start signing them right there up on the podium. And they're going to start shipping natural gas and things like that to Europe and bring the prices down. So there is we showed you heating oil, which is kerosene. It powers all these different products like trucks and airplanes and things like that, and heats houses. That's why we call it heating oil. And now you see natural gas, which is powering generators and electrical plants and just heating and does all that stuff. So that's pretty much the energy. Now we're going to slide down to Spain. Right? Where's it at? We're looking at the ENMG. Right? Let's see, where are you at? Right there. ENG. This is a Spanish energy company. You see, it's been trying to press down and down. It's a couple weeks in a sell. And you see, it's this is right in here. It went into the weekly sell. Somewhere's in here. You see, it's definitely lower. It's a stock. And so it's it doesn't trade big numbers. I mean, when it was way up in here, that's like $13.60, $13 or €13.60. And now when it's traded all the way down to say here, it was $12. I'm sorry, €12.05. So, that's a 8%, 7%, 7%, something like that. So it's not the wildest thing, but it does give you a good idea what the cost of energy is in Europe. And that is that this company is dropping in price, which means it is finding ways to go lower. So, all right. This is Doc from North America saying we will catch you tomorrow on Happy to Hump Day, Wednesday. So, happy trails to you until we meet again. Oh, November retail sales came out. Plus 0.2% versus an estimated 0.3. See, that's a good thing. That helps the Fed justify their quarter cut. Probably seeing a little stock market move up from that. Let's see. Happy trails to you, to all our trading friends, Dukascopy trading friends. So, Dukascopy traders, we will catch you all tomorrow, same time, same channel. So, arrivederci.